Good morning. All right, so audio's back. Morning, everyone. It is September 30th, the final day of the month, the final day of the quarter. The quarter end is here, and it's Monday also. So we're going to be jumping in October as this month flew by. Wow, yet another one. So take profit selling as markets are pushing into all-time highs, which is not one of the reasons, not the main reason, but one of the ideas that I'm looking at in terms of this market, more bearish note, as we've sold off, right, a decent bit, nothing crazy on the overnight session here. But some of the main things that we're talking about, right, is going to be some potential supply chain risks with thousands of dock workers at ports on the east and Gulf coasts from Maine to Texas are preparing to go on strike at midnight as negotiations with port employers for a new labor contract have reached an impasse. We also had last week the news of Chinese stimulus coming through, which is pumping aggressively to the upside in terms of individual Chinese names like Baba. We've seen explode yet again to the upside with another gap higher. Names like Neo, names like KWEB, right? Chinese names are up pretty aggressively over the last several days here on news that stimulus is finally hitting the slowing growth China. Something to keep tabs on to understand what's going on from that perspective, to get a better view on things there, because going into 2025, if that's something actually of real validity, you're going to see the expected expansion in just broader equities. So let's take a look at the potential supply chain strikes here, or supply chain risks based on strikes. The work stoppage would be the first East Coast port strike since 1977, actually. The United States Maritime Alliance, the USMX, refused to address a half-century of wage subjugation where ocean carriers' profits skyrocketed from millions to mega billion dollars, while the ILA longshore wages remain flat, said the International Longshoremen's Association. So the USMX represents port employers including Zim and Maersk. The union workers have been demanding better wages, automation protections, and benefits with their current contract set to expire today. So the work stoppage is expected to impact more than 50% of U.S. imports, while diverted shipments will likely strain West Coast ports ahead of the busy holiday season. The strike is estimated to reduce the U.S. economic activity between $4.5 billion and $7.5 billion every week it continues. So according to the Oxford Economics, every week that cargo is stalled and backlogs created could take as long as a month to clear, because West Coast ports are already operating at near capacity. So retailers, automakers, and other businesses face higher freight rates as they make contingency plans for inventory amid mounting West Coast port traffic. And JP Morgan doesn't see the port strike lasting longer than a week, but warned that the consumers could face higher prices or empty shelves for certain products. And we could take a look at different sectors and stocks and the risks from that port strike, but this starts to disrupt the potential of the supply chain, especially if we start moving past even just a week's time overall. So based on that, right, that's pretty much the majority of the news that I've seen, other than potentially some news that's expected to come out this week. From California, right, California Governor Gavin Newsom system is deployed in high-risk environments, involves critical decision-making or the use of sensitive data, he said. Ultimately, any framework for effectively regulating AI needs to keep the pace with the technology itself. Google, Meta, Microsoft, and OpenAI have criticized the bill for imposing vague standards in the name of safety. So some tech, right, maybe not based just off that, but some tech is starting to pull down a little here pre-market. And in terms of today's news, Fed's Bowman is speaking on economic outlook and monetary policy currently as I'm speaking. Shame on him. We have the Chicago PMI today, the Dallas Fed manufacturing survey, and Jerome Powell today, right? 1 p.m., Jerome Powell's talking about finding a harmony in the noise, transitioning to a new normal. I'm not necessarily 100% sure what that is, but that's the name of the topic. So Let's see, can we get a little more information on Jay Powell's comments today at 1 p.m., which could affect market movement into the afternoon, depending on how, um, what exactly is being talked about. But I would suggest taking a look at that and being a little more cautious at that 1 p.m. mark. We've also seen that, what's it called? Let's take a look at China here for a second. The Shanghai Composite is up very, very aggressively, the biggest bid since we've seen since 2008 even, right? So from those lows, currently it's up about 23, 24%, right? Erasing many, many losses on the news that the stimulus is actually coming through. So we want to see a little more validity and confirmation that the stimulus is something real, because that's going to aid a lot of these Chinese names to the upside, which present a very, very good swing and investment opportunity, if not already in those, in anticipation of something of the sort coming through. So this week, other than Jerome Powell, we have non-farm payrolls that come out on Friday and some employment claims on Thursday before that. So it's a very front and back-loaded event calendar this week that we're going to be taking a look at, so some things to consider there. But in terms of the overall plan for the